What's up guys, Moyed here, welcome back to another lesson. So in today's lesson what I'm going to be going over is the most optimal ways that I personally like to use the Orderflow software and the Orderflow concept, okay? So as I said before in multiple of my videos, with Orderflow you can use it in many different ways. You can use it just to solely trade Orderflow setups, or you could use it as an extra confirmation. Today I'm going to show you the most optimal way to use it and just the way I like to use it in general, in conjunction with Smart Money and Wyckoff. Okay, so one of the first things that I will always like to see before checking my order flow setup. Okay, so usually I'm not just like stalking seller traps, buyer traps, or looking for exhaust, etc. Usually what I like to do before looking at my order flow software is to identify, okay, 2 points of interest. Point of interest in general, but my two main ones will always be an institutional candle, okay, and my second one would be liquidity. Why institutional candle? So for example, if we see that, okay, my price action is creating higher highs, higher lows. Now I'm not going to be talking about any other confirmations when it comes to, like, from a smart money perspective, like market structure or anything like that. No, everything is in order. Okay, what we're looking at right now is an institutional candle, for example. So what I'm looking at is price just about as it hits that institutional candle, and what I'm doing is I'm going onto my Orderflow software and checking out what price does when it hits my institutional candle. Why? Because when price hits my institutional candle, okay, just on a normal price action chart like this, okay, I won't know. Our seller is going to keep continuing down. Is there going to be some sort of manipulation right here? Is aggressive buying starting to come into the market, etc.? I won't know if aggressive buying is coming into the market until I actually see this massive blue candle. By this time it's too late. But with Orderflow I will start knowing just from the bottom here, because usually the aggressive buying will start occurring at the bottom of this candle, okay? So this is something that I would use Orderflow for, okay, to check if my institutional candle is actually going to be successful or not. Or for example, I might have my stop loss, let's say I'll have my stop loss all the way down here, okay, and I bought, maybe I didn't look at Orderflow at that time, whatever, I bought, but then I start seeing another bearish candle, and I'm like, oh, okay, could price potentially go all the way down to my sell? So what sometimes I can do is I can mitigate my loss and take it out early, okay, and not take the full loss by checking Orderflow, by checking basically the order flow of the candles and seeing, is there aggressive selling at this point, is there aggressive selling at this level, or is there potential exhaustion of the selling, okay, and then the passive buyers and the aggressive buyers are starting to come to the market. Okay, so this is something that I could see. Then when we're looking at it from the perspective of liquidity, okay, so what we could be looking at, for example, is once price action approaches an area of liquidity. Let's say, for example, price action approaches here. Okay, there's always two possibilities: either the possibility of just a breakout, okay, a breakout and keep continuing down, or the possibility of a breakout down, okay, clear liquidity and a push up. And this is what Orderflow will always tell me. What I would always like to see is exhaustion down at the bottom right here. Cans getting weaker. Okay, usually cans will get weaker, and then you'll have 3 consecutive very strong bullish or bearish candles. This will take out liquidity. From a price action perspective, okay, from a price action perspective, this candle will look extremely strong to the downside, okay. This will be your institutional candle. So the example right here, this would be a great example of this here. So very strong bearish candle, looks like it will keep continuing down. And this is something that you're taught from a retail perspective. You're taught that, okay, for price to start getting exhausted, you usually start seeing a big candle, okay, and then a smaller candle, candle, okay. But no, here we can see that the candle is starting off smaller, they're getting bigger, and then boom, you get that reversal. So this is how you'd be able to tell from an order flow perspective, okay, because from a price action perspective, if we just replayed back here and not seeing this, we would think that it would keep flying down, okay. We also had a point of interest right here, this imbalance that we had filled in, okay. So price came down, filled in this imbalance, so you can see, boom, once price came down here, now we can see the order flow changed from bearish to bullish. So this is something that we can notice. Once again, as I was saying, with that liquidity, okay, you usually will have strong candle just like this, boom, and a reversal up. So this will allow us to see. Now I'm going to pull up the order flow software right here, okay, and this time what we're looking at is just the 1 hour time frame on the Orderflow software. The 1 hour time frame is actually it's much cleaner. Now I know you guys will mostly be looking at like a lot of people in general, whoever uses Orderflow, will usually be looking like the 15-minute time frame, etc. Because, for example, if you are taking like a 1 hour time frame trade, okay, like if I'm looking to get in on this 1 hour IC or whatever it is, then I won't, for Orderflow, I'd be looking at like the 5-minute Orderflow or the 15-minute Orderflow to confirm, so I can get in on my entry quickly before that 1 hour closes. Because especially with Orderflow setups, they're usually very, very volatile, and usually they will go in your intended direction straight away, because it will just show very, very aggressive buying, you know, or very, very aggressive selling. So the price action, the move will be instant. So when it comes to 1 hour here, this will usually be like your more longer term setups, such as, you know, the 4 hour, 8 hour, 12 hour, stuff like that. So looking at our first example right here, we can see this was the institutional candle, I believe, that we were talking about earlier. Okay, this was the candle that we were talking about earlier. Look at this. So this is beautiful. Okay, this is a beautiful, beautiful type of candle that you'll always see. This is one of the setups. This is one of the setups that you will always see happening, and you can always count on this setup. If you don't know anything about Orderflow, if you can only learn one thing from this whole course, okay, if everything else doesn't make sense, hopefully it does, because everything was explained beautifully, I believe. But if you can only learn one thing, okay, this will always be your fail-safe. This type of setup. What is this type of setup? To recap, this is the big push down. Okay, you can see Orderflow. You can see basically selling imbalance, selling imbalance, selling imbalance, aggressive selling. Usually, selling imbalances will be larger numbers, larger order contracts than the other numbers. Okay, so large selling, and then you get another large selling here. And this candle is looking like it's going to be bearish. Okay, so this is a setup that we explained many times as well from price action perspective. So it will be bearish, and then what you have, a lot of selling pressure right here. Okay, we got a lot of selling pressure right here. Boom, boom, boom. So you can see, compared to all the other stuff, like we have 109 here, we have 18, 86, 97, 26, blah blah, 200 maybe. Okay, but these will be usually large orders. So we have three selling imbalances like this, and when you have 3 imbalances like this is called a stacked imbalance. Okay, so once again, this is just recap on what we have already covered. Okay, and then what does this candle do? Boom, we have buying imbalances. Buying start coming in. Okay, buyer's ratio, blue ratios right here, and price is starting to fly. What does this candle do? It closes bullish, and our COT closes down at the bottom right here. So you can see at one point the candle was trading all the way down here, and out of nowhere we start getting passive buying, aggressive buying coming into the market, and passive buyers as well. Now what potentially could happen right here is, this is what we're doing. Okay, so what we're looking for is, let's say there was an institutional candle right here. Okay, there was a 4 hour institutional candle, price comes down to the 4 hour institutional candle. Now what we're looking at is people, okay, there's going to be obviously sellers trying to break down, create a new lower low. Okay, so usually this will occur near to highs or lows. Usually you will find these traders, they're just selling. They're thinking that a breakout is going to happen. Okay, they're anticipating that breakout before the breakout even happens, especially when it's clear near to a low or near to a high. Okay, and then what we're looking for here is the seller trap. Okay, and then the candles are closing bullish. So what we're seeing right here with these blue imbalances right here is the buyers are coming in. Okay, so institutions are starting to buy. They mitigated their sell. Okay, they mitigated their they mitigated their buy position. Okay, they mitigated their manipulation phase from that 4 hour IC. Okay, that we're just considering somewhere around the left. Okay, and then they're closing out. Okay, they trapped everyone. They took out liquidity from this consolidation that we had, and then they turned price up. Okay, and then you can start seeing buying imbalance. So this would have been perfect setup to get into right here. Okay, we also had that single print right here, so showing us exhaustion. Okay, so all in all, this would have been like a perfect setup. So this is exactly what we're doing. Okay, we're waiting. Now I actually don't even know which candle that was. Let's see really quickly. This. So this one. So I believe this one was this candle. Okay. So this candle right here was this move right here. Okay, this move right here. So what did it do? It reached right into an area of demand for us. Now if this is an institutional candle, must be on like the 4 hour. Okay, so see, reach right in here. So on the 4 hour time frame, reach right in here. See, very, very strong support level as well. Hit the 50% of RSI. Okay. And pushed up. Once again, from a price action perspective, we wouldn't anticipate this move. Okay. We wouldn't have a confirmation of this move until we see this candle close. But this is a beautiful thing about the order flow. We can actually see the confirmation, very, very strong confirmation. Boom. Buyers are starting to come in. What do we have? Manipulation of sellers right here. Okay, so the last sellers get manipulated, and then boom, bullish price action. The one that candle starts moving up, bam, bam, bam. What do we have? A lot of stacked imbalances of these blue buying imbalances right here. Okay, so our confirmation, once we start seeing this right here, now we could even see this, remember markets fractals, we can see this orders being cleared on like the lower time frame as well. So once we would have seen this on like the 5 minute, 10 minute or 15 minute, boom, we would have found our entry instantly. Now, you could have as well taken the trade straight from the 50%. There's nothing wrong with that, especially if you're more focused on the, just taking setups from a price action perspective. At the end of the day, I did mention before that it's all about your reliance on order flow. Like, how reliant are you on this? Okay, how much do you trust the order flow for your analysis? Because some people will trust their smart money intuition more, or their Wyckoff intuition more. Okay, so it really depends on how reliant you are on it. This question I cannot answer for you. It's going to be your own backtesting, your own strategy, and you're going to have to see how much you're going to rely on this, how much you're going to take these setups, etc., etc. At the end of the day, all that we're showing you guys is we're showing you the theory behind it, why it's happening. We're showing you that it actually is happening, and we're showing you how to look at it from multiple perspectives. Okay, so it's all an open book at the end of the day, and you get to take whatever you want from it. Okay, so one last example that I want to show you guys here. Look here once again. Every time we clear that liquidity, what you have is seller trap and then price pushes up. Every time we clear liquidity, seller trap, price pushes up. So this is something that you always want to look out for. Okay, so what do we have right here? Low. We get seller trap, clear that liquidity, and we push up. Buying imbalances always occur after that. Once again, what do we have here? Seller trap, okay, stacked imbalance, seller trap, clear that liquidity, exhaustion, push up. Okay, buying imbalance start occurring right after. So you can see what you want to do. Like this, the way I use order flow, okay, when it comes to order flow, I always want to look at it. I don't just look at it randomly. I always want to look at it once it comes close to a point of interest. So to recap, once it comes close to my liquidity, I want to notice what the price is doing around here. What type of selling pressures that we're getting there? Are we getting aggressive selling? Blah, blah. Are we getting seller traps, selling imbalances? Same thing when it comes to institutional candles. Is the buying starting to occur right here if I'm looking for a buy institutional candle? Okay. Or is there still aggressive selling coming in? So this is something that you always have to ask yourself, okay? And not just look at the colors and the numbers and just be like, yeah, I see a seller imbalance right here. Or I see like an exhaustion. I see a single print, let me buy, let me sell. You have to have reasoning behind it, and you have to have something to back it up. Okay, so this is the most powerful way to use order flow. With that being said, hope you guys gained some value from this lesson. Thank you guys for tuning in, and I'll see you guys on the next one. Have a good day.